Hey everyone, small cap stocks can make you rich, but they can also test your patience. Also, some small cap companies can become wealth destroyer. So the challenge is to shortlist the right set of companies from small cap universe. Now, how do you separate real long-term winners from short-term hype? Well, one smart way is to track what the top small cap mutual funds in India are holding right now. These funds are run by seasoned fund manager managing thousands of crores of investors' money. If they are placing long-term bets on certain small caps, it's worth paying attention, especially if you're a long-term investor. So in this video, I'll show you the top conviction small cap stocks held by India's 6 biggest small cap mutual funds based on AUM. We'll also look at the latest buying of these fund houses to get an idea on stocks they find attractive at current levels. But before we proceed, as an investor in the market, whether it's mutual funds or direct stocks, it becomes very important to review your portfolio from time to time. This helps you understand if your portfolio is underperforming, is it diversified enough, if some investments are pulling down your returns. These are important questions that a regular portfolio review help answers. And one app that I think does it really well is Deserve, our partner in today's video. All you need to do is download and sign up on the Deserve app, and you'll get a clean and detailed analysis to understand portfolio performance. Here, let me show you. So you can see all your mutual fund and stock holding in one place, giving you a view of your entire portfolio. You can see your portfolio performance against the market benchmark, which gives you an understanding of your portfolio's actual performance. And my favorite insight, the app gives you recommendation on which mutual funds you should exit from your portfolio. We as an investor generally pay more attention to what mutual funds to buy, but knowing which ones to exit from your portfolio will help you optimize your portfolio's return. Deserve app is extremely useful for investors who want to get an understanding on how well their portfolio is performing. You can download the app by clicking on the link in the description. Now let's get into the video. So the number one fund in small cap category is Nippon India Small Cap Fund that has an AUM of 58,000 crore. And this fund has generated 25.5% CAGR return since inception. Next, if you look at the asset allocation, it has got around 95% exposure in equity, and within that, large cap has around 12.6% exposure, mid cap has 14.2% exposure, small cap is 67.7%. Please note that as per the classification, the minimum capping for small cap fund is having exposure of 65% in small cap. Next, if you look at the top holding of Nippon Small Cap, first stock is HDFC Bank with 2.2% exposure. Now, obviously, if you look at the recent state of market, especially the broader market, the valuations are not cheap. We have seen a sharp rally in last 6-7 weeks, and that's where the valuations have become slightly on the higher side. And that's where I think the private sector banks are still looking good, especially your large cap private banks, and that's where even HDFC Bank is the top holding. Another interesting observation is that none of the stock has got very high exposure. In fact, Nippon Small Cap has got more than 200 stock in its portfolio. Then second stock is MCX, which is Multi Commodity Exchange with around 1.95% exposure. Then next stock in the list is Dixon Technology. Now, if you recall, I recently did a video on top mid-cap stocks that are purchased by mutual funds, where Dixon was one of the top bet. And the reason is rightly so because it is one of the fastest growing company in the country where the earning growths are exponential. The only concern at the moment is the valuation, where Dixon command a PE of more than 100. So it is priced to perfection. Any weak quarter can result in valuation derating. But then your mutual fund houses are still betting on it because of its growth prospect, and probably they are willing to pay the premium for it. Then fourth stock is Kirloskar Brother, where Nippon has got 1.3% exposure. If you look at the sector-wise breakup, Capital Good is the top pick with around 17.8% exposure. Financial is second with 11.6%, services is 10.6%, and then consumer staple with 9.24%. Now let us look at the stocks that Nippon has purchased last week. So the first pick is Kajaria Ceramic, where it has made a new entry, purchased 181 crore worth of shares. Second is Dixon Technology, where it has purchased 153 crore of shares over and above your 619 crore of investment. Third stock is Paradeep Phosphate. Quite interesting, where they have increased the stake by 153 crore. Next is MCX, where they have increased the stake by 151 crore. And fourth is Axis Bank, again a bank where they have increased their exposure, and that too from large cap private sector. Now moving on, Second top mutual fund in small cap category in terms of AUM is SBI Small Cap Fund. That is a name of around 31,790 crore. This fund has generated a CAGR return of 24.3% since inception. If you look at the equity breakup, it has got around 88.8% exposure, where it is showing small cap as 86.8%. But interestingly, if you look at it, its top holding include Nifty 50 index fund with 9% exposure. So here if you see, because of the volatility we have seen in small cap index over the last few months, majority of small cap mutual funds are trying to stabilize their portfolio by having some exposure in large cap. And here same story with SBI, where they've got 9% exposure in Nifty 50 index. Then second is SBFC Finance with 2.87% exposure. So SBFC is basically your lending company into your MSME lending, which is a secured lending, and another is also your gold loan segment. Third stock is Domes Industry with 2.85% exposure. Again, a very interesting company. It is into your stationery and pencils and craft work, right? And this got listed in December 23, so just 1.5 years old listed company. Very interesting leader in this space. Then fourth name is Krishna Institute of Medical Science. Again, healthcare is one sector that is growing at a very fast rate in India, and KIMS is from a relatively smaller cap segment with a market cap of around, let's have a look, around 26,000 crore. And it has got 2.5% exposure. If you look at the top sector, financial is 20.6%, services is 13%, consumer staple is 9.6%, and capital good is 8.3%. If you look at the recent purchase of SBI Small Cap, it includes Ether Energy, which is the recently listed IPO, 240 crore of purchase. Next is Sundaram Fastener with 208 crore. So this is part of your TVS group, where it is into your critical component manufacturing. Next is Navin Fluorine. Interesting one. Chemical sector has been struggling for a while, including Navin Fluorine, but they have recently increased stake by 185 crore. So that shows the conviction within your Navin Fluorine. Then next is your SBFC Finance that we discussed recently. And fourth is Kajaria Ceramic, which was also added by Nippon Small Cap. And then if you look at the third mutual fund, which has got the highest AUM, it is your SDFC Small Cap Fund that has an AUM of 30,800 crore. This fund has generated around 20% CAGR return since inception. If you look at the exposure, equity include 92%, where large cap is around 4.5%, mid cap is 8.2%, and small cap is 79.7%. If you look at the top holding, again very interesting one, it includes First Source Solution and eClerx, which is basically from IT services sector, where First Source has got 6% exposure, eClerx is 3%, and then it has got Aster DM Healthcare, again a healthcare company with 3.99% exposure, and that has got Bank of Baroda, which is a PSU bank with 3.79% exposure. And here is your top sector breakup. Next, if you look at the top stocks purchased by SDFC, first is Sonata Software. So it looks like SDFC Small Cap is doing a contra bet and buying IT stocks that have corrected significantly. So Sonata, it has purchased 179 crore over and above their 600 crore of investment. Second is Bank of Baroda, again PSU sector bank, and valuations are looking reasonable. Then Home First Finance. I have discussed the entire affordable housing finance sector, and Home First has been one of the fastest growing company in that space, where they purchased 95 crore of shares over and above their exposure of 452 crore. Then fourth is Equitas Small Finance. Again very interesting, one of the sharp correction that has happened in Equitas entire small finance sector. But again SDFC is looking like a contra bet, where Equitas valuations are quite cheap. So it is trading at a price to book of just 1.2. Maybe small cap sector can do well in FY26. We have to track it. And then it has got Chambal Fertilizer that purchased last month. Then fourth top mutual fund in small cap category by AUM is Quant Small Cap with a name of 26,200 crore, and this fund has generated 18.18% CAGR return since inception. Next, if you look at the allocation, more than 90% is in equity, but it has got 22.78% exposure in large cap, which is the highest among the mutual funds that we have discussed. Mid cap is 3.3% and small cap is 65.26%. So it is just keeping that cap of 65%. If you look at the top holding, your Reliance and Jio include more than 15% exposure in your Quant Small Cap. Then Aegis Logistics is 3.95% and Aditya Birla Fashion is 3.24%. If you look at the sectoral breakup, service followed with healthcare, then energy, and then financials. If you look at the recent purchase of Quant Small Cap, first is Reliance Energy, then second is NBCC, and by the way, this is a relatively new purchase of 245 crore, then Jio Financials, fourth is Poly Medicure, and the next stock is RBL Bank. Again, this has corrected significantly over the last few months, and the valuations have become below price to book of 1. But again, you need to do your due diligence and figure out whether it is worth investing or not. Then next mutual fund is your Axis Small Cap with an AUM of 23,300 crore, and that has generated 24% per annum of CAGR returns since inception. Again, a good exposure of equity with this 87.8%, large cap is 4%, mid cap is 16.5%, small cap is 67%. What are the top holding? Again, first is your healthcare, Krishna Institute of Medical Sciences with 3% exposure. Next is Cholamandalam Financial Holding with 3% exposure. Blue Star with 2.8%, so basically it is betting on consumer durable space that has also underperformed for a long time. And fourth is Brigade Enterprise with 2.7%, and here is your top sectoral breakup. If you look at the top stocks purchased by this fund house, first is Radico Khaitan. Again, consumption, and within that Elco beverage is a big theme, and Radico Khaitan is a fast growing company in that space. All the valuations we can always debate are on higher side, but Radico Khaitan is what they've purchased. Second is MCX they've purchased. Then next stock they've purchased is Data Pattern. Again, a high growth company within your defense category. Although recent rally has been quite sharp and the valuations are on higher side. Then we have got BSC and Kalpataru Projects International. Moving on to the last mutual fund, which is the sixth one, is your Kotak Small Cap, where the exposure is 15,800 crore, and this fund has generated 20% CAGR return since inception. If you look at the asset allocation, 93.7% is in equity, large cap is 5%, mid cap is 17%, small cap is 71%. Top holding include your Aster DM Healthcare, so again a healthcare company on top list with 3.7% exposure. Krishna Institute, again a common name among mutual fund with 3.5% exposure. Vijay Diagnostic is 3%, so healthcare is a focus of Kotak Fund. And then Century Ply with 2.9% exposure. So you can see top holding is healthcare with 21.5% exposure, then capital goods, consumer discretionary and services. If you look at the latest purchase, first is Solar Industry, which is from your defense segment. Then second is V-Mart, which is your affordable value fashion category. Third is Aster DM from healthcare segment. Then fourth is Techno Electric. Again, recently this company has posted fantastic numbers. And then is your Brigade Enterprise. If we try to summarize the stocks that are common in the top holding of these mutual fund, first is Krishna Institute of Medical Sciences, which is part of SBI, Axis and Kotak Small Cap. If you quickly look at Krishna Institute of Medical Sciences, it is trading at a PE of 69.8. But if you look at the growth, it is growing at 27% CAGR rate in 5 years and trailing 12 months is 22%, although 3-year growth is on lower side at 4%. So valuations are slightly on the higher side in my opinion, but then the healthcare trend is looking quite attractive in India, and certainly one of the reasons why your top small cap mutual funds are picking this company. Then if you look at next is your Aster DM, again a hospital stock, and current market cap is around 27,000 crore, P is again at 68, and if you look at the growth, it has grown kind of 209% in trailing 12 months, but before that it was in losses. Then if you look at the common stock in latest buying, there's only one stock, which is Kajaria, where Nippon and SBI have purchased stake. So that's it for this video. I hope this will give you a fair idea in terms of which small cap funds are purchased by top mutual funds, and you can deep dive further. Please make sure don't invest your money blindly. Ensure that you do your research so that you can invest with conviction. Let me not stress this video. If you find it useful, do share it within your friend circle. And if you want to review your portfolio, be it your stocks and mutual fund, do explore the Deserve app. I provided the link in the description. I'll see you next video. Till then, take care. The views and opinions expressed are my own and does not reflect or represent the views and position of Deserve Investment Private Limited or its affiliates. The information contained in this video is for general and information purpose only and is not meant for advisory or recommendation purpose.